Alright, sorry, my recording stopped. I didn't know it's taking just 10 minutes to do this. Alright, let's continue. We stopped at there. They don't want mentorship. Okay, so to round up, mentorship will give you in few days or in few months what self-education will give you many years to achieve. So, like as I was saying, it is better to pay for things like get it fast, because like as I was saying, nobody can teach you Forex for 3 days or 2 days. But if you are a part of a group or a community or mentorship where the person always comes online to teach and always correct and all of that, so you can stand a chance of making something important out of it. All right. Another reason why people feel is they focus more on the money and not the skill. Their goal is actually money. Their goal is not the skill. So as you are in this class, I want to give you the best mindset starting from today, that what you should be focusing on coming into the Forex industry is focus on mastering the skill. Forget about the money. When you know the skill, when you know how to trade, money will be a natural occurrence. Okay. So you do not have to be pursuing money. If you pursue money in this industry, you will lose big time. Okay. So we're talking out of experience. They assume it was an easy vehicle. Forex is not easy. Okay. And to be frank, nothing in this life that makes money is easy. So don't come with that first mindset. That first mindset is wrong. Okay, make we go hammer. Yes, Forex is the easiest way. Forex is the hardest way to make easy money. Okay, Forex, I repeat again, is the hardest way to make easy money. The money in Forex is enormous. Don't worry, we'll soon enter the class. So there's what we call the cycle of doom. Next slide. Cycle of doom. The cycle of doom explains that somebody coming into the industry whose idea is all about making money, he starts with a strategy. All right. Once he starts with a strategy, he will now test the strategy to know if the strategy will work. After a while, the strategy will work. And then once the strategy doesn't work anymore, the person dumps it. He dumps the strategy and then start. What do you think the person will do after he tests the strategy and the strategy works for a while and the strategy stop working? What do you think the person will do? The person will dump it, and once the person dump the strategy, he will repeat the same process and then back to strategy, back to test, back to dumping. There's a little note I put on that. You can run this cycle for years without mentorship and finally give up your dreams and aspiration to become a professional trader the world is waiting for. All right. So mentorship will help you avoid all these traps. All this trap of you enter strategy, you test the strategy. It is in mentorship that will tell you that no strategy is 100% in Forex. Okay. Every strategy begins from 90% win rate to 50% win rate. And any strategy you are even trading that is even 40% win rate, over the long run, you are going to be a winner. But the strategy we use here wins all the time. The most important thing is if you have an account of up to $50, but we'll get there. Let me not jump over myself. Let me not run after myself. All right. But our strategy for Institute of Market is very killer. The entry is superb. If you want to do swing, is also superb. If it's short trade where you hit and run, is also superb. So everything is there for you. And then what is Forex and why you should learn and master the skills? So now we are entering the school properly. What is Forex? Forex is a short-term word which stands for foreign exchange. The Forex market is a $7 trillion market. Wow. What does that mean? It means that every day that me and you sleep and wake up, we wake up in the morning and go to bed 24 hours. every day we sleep and wake up, the market, the money that goes through the forex market is 7 trillion US dollars. All right, so that one is above your country, what do you call it, budget and all of that. It doesn't stop anybody from taking what belongs to. In fact, I have a mentor, a white guy who makes $500,000 in one day. I saw that result one day. I shouted. So if you make $500,000 in one day from the forex market, does it shook the market? It didn't do anything to the market. The market is $7 trillion. You see, when we start going deeper, you see that different people are in it. Even your federal government are in forex trading. Even the bank where you just make your salary and go and dump your money in the bank, that is where they put your money. Okay, they put your money, and when it is time to pay you, they rob Peter to pay Paul. All right, your 5,000 that you put in the bank, they are putting it in the forex market, and they are making serious money out of it. Okay, so let's continue. And the largest online market, the forex market, is the largest market in the world. It is second to none. There's nothing like it. Crypto is not large. It's not the largest. Forex is the largest. Not crypto, not affiliate marketing. I mean nothing. And no market is as big as the forex market. So the pain of learning the business is worth it, guys. The pain of learning forex is worth it. The forex market is the exchanging or the buying and the selling of world currencies. Just like you have dollar, pounds, euro, Japanese yen, Canadian dollars, New Zealand dollar and Australia. There are many of those currencies in the world. Kuwaitian dinar, those Kuwait, and then Nigerian naira. So that's just it. You are actually, studying the underlying factors that account for the strengthening or the weakness of a particular currency over the other. So when we say forex, it means you are trying to merge two country currencies together to determine their weakness or their strength. Okay, so and there are factors that are responsible for that. Okay, and you are going to get that as we go. All right, so for example, if you want to compare two currencies like the euro and the United States dollar for strength and weakness, all right, the currencies come in pairs. All right, one currency must be traded against the other. Therefore, the above pair will look like this. For when we say the above pair, I'm talking about the euro. And the United States dollar. This one, the euro here and the United States dollar. So they will now look like it. It will now be euro in short form versus the US dollar. So if you want to trade it, this is the way the pair will look like. Looking like this means you are trading the European dollar, you are the euro, right? The European euro. You are trading it for the United States dollars. Okay. So also there are various methods we use to determine the strength or weakness of a currency. All right, of a currency pair. So which can either be by price behavior pattern, by price behaviors and pattern. We can also use indicator. We can also use economic news or geopolitical events. Okay, those ones are a bit advanced, but don't worry. If you join the mentorship, you will understand much more of this. But I hope to touch some of this even in this free course as we move along, because we'll be having a Zoom. The forex market is the world's largest market in terms of daily volume transaction, and it is the most liquid. When we say something is very liquid, it means the frequency of the buying and the selling, the frequency or the ease with which you can exchange this money for the other money, the ease with which you can exchange